Hey fools, and welcome to another Motley Fool video. My name is Chris Niles, and welcome to part 2 of our 2 stocks to boost your retirement portfolio. Now, last time, if you saw, we actually spoke about if you had more than 10 years to retirement, but this time Jill is actually going to go through something a little different, and that's if you've got less than 10 years. So, Jill, let's have a little recap of why we love dividends.
Sure thing. First things first, they pay us real money for owning the shares, holding
Absolutely.
the shares. Beautiful. Second thing, a little bit of peace of mind, regardless of what the share price does, if you own a good, solid dividend-paying company, you're still going to get that dividend check every quarter, every 6 months, every year. So hard to argue.
Hard to argue. What's not to like, I guess, in that stage. And as with everything in investing, Jill, again, what's the risk?
There are 3 key risks I like to talk about when discussing dividend-paying shares. First, don't chase high yield. If a yield seems like it's going to crush the market and it's too good to be true, probably is.
Yeah, absolutely.
The second is a bad track record. If a company has cut its dividend repeatedly, that's not a good sign, and I would want to stay away from that type of stock. And the third is look under the hood and check to make sure that the financials supporting that dividend are good. If the company's balance sheet is weak, guess what's going to get cut if they hit tough times?
Every time.
The dividend.
Absolutely. So if you do have less than 10 years to go to retirement, let's have a bit of a reveal. Jill, can you think of any particular stock that you might want to have?
Absolutely. So if you are within the decade of retirement, congratulations, first of all, right?
Yeah.
But where we talked before about a longer timeline and being able to put some more growth into your portfolio, I think the strategy now starts to shift to both growth and income.
Absolutely.
So you're looking at more medium yielding, medium growth stocks, whereas before with a longer timeline, we talked really about a low yield but a high growth idea.
Absolutely.
So I have got 2 ideas.
Okay,
the first one, these are both big names here in the UK. The first one is Tesco, T-S-C-O, pays about 4%. And when we talk about medium yield, that's actually a pretty respectable yield. But
yeah, sure.
it also has some growth built in, because while Tesco's got a pretty good business here, it really is, to me, more exciting about what it's doing outside of the UK and if it gets that right. So there's growth in that.
Absolutely.
In that idea.
Okay, great. So there was number 1. That was Tesco. We're not going to horse around, and that's ticker TSCO. Jill, number 2.
Well played pun there, Chris. Unilever, ticker ULVR, also pays a respectable yield of about 3.5%, somewhere in there. Again, big, solid company here. However, it's going after emerging markets, so there's some growth baked in. So it doesn't have, 5, 6, or even 7% yield, which we'll talk about in part 3 of the series, but it does have a solid yield, a great source of income for people as they come toward retirement.
Okay, so there you have it, guys. There's another 2 for your portfolios there, and like Jill said, next time we're going to talk about what to do if you're actually at retirement age. So thank you very much for joining us, and we'll see you next time.